S&P Global is an absolute giant in the world of financial data. So today, we're going to crack open their latest earnings report and see what's really driving their massive success.
And right out the bat, here's the headline number, $15.3 billion. That's the company's total revenue for 2025. But as always, the real story is how they actually got there.
So let's dive into the key performance metrics. These numbers really tell a story of a company that's firing on all cylinders.
First up, their revenue. It saw a really healthy 8% increase compared to last year. That tells you the demand for what they do is strong and growing.
But it gets even better. Take a look at their net income, the company's profit. That grew by an impressive 16%. So they're not just making more money, they're getting way more efficient at it too.
And here we go. This is the number that investors really care about, earnings per share. This metric jumped by a whopping 19%. For shareholders, that means their slice of the profit pie just got a whole lot bigger.
So what's the company's take on these stellar results? Well, President and CEO Martina Cheung basically credited their strong strategy and a really resilient business model for riding some favorable market waves.
Okay, so the crucial question is, where did all this growth actually come from? Let's pop the hood and take a look at the engine room.
Now, what's really interesting here is that you can see every single division contributed to the year's success. This wasn't a case of one part of the business carrying all the weight. No, this was a total team effort. Two segments in particular, though, really stood out. First, the indices division, think the S&P 500, which grew by 14%. That was mainly because when markets are strong and more money flows into funds, their fees go up. And then there's the mobility division, which also had a fantastic year.
All right, a company doing well is great. But if you're an investor, you're probably asking, what's in it for me? Let's see how all this success translates into direct value for shareholders.
And they definitely delivered. In 2025, S&P Global returned a massive $6.2 billion directly to its shareholders. Just think about that.
So how they do it? Well, two main ways. The vast majority was through share buybacks, which can help increase the value of the remaining shares. And the rest? That was paid out in cold, hard cash through dividends.
And this commitment to shareholders? Well, it's nothing new. Get this, they have now increased their dividend for 53 straight years. That is an absolutely incredible track record of consistency. We're talking over half a century.
So, after a truly great 2025, what does the company expect for the year ahead? Are the good times going to keep rolling?
Looking at their official guidance, the answer seems to be a very confident yes. They're projecting another year of strong growth in both revenue and earnings, and they plan on returning at least 85% of their available cash right back to shareholders.
Now, you might notice they use terms like adjusted in their guidance. It sounds a little technical, but it's pretty straightforward. It just means they've taken the official accounting numbers, that's GAAP, and they've tweaked them a bit to remove any one-off items. They do this to give you what they feel is a clearer picture of their core business performance. Which leaves us with one final big question. The company is forecasting another really strong year, for sure. But there's a major change coming down the pike. They're planning to separate their high-performing mobility business. So, the real nail-biter is, can they keep this powerful momentum going without one of their key growth engines? I guess we'll just have to wait and see.